In this video, I am going to teach you a powerful trend setup that fails less than 5% of the time, meaning that this is going to be 95% accurate. Without further ado, let's roll the intro. Over my 14 years of experience, I've seen that trading in trend is much more powerful than any other trading style. Of course, there are a lot of trading styles that are available out there: reversal trading, range trading, and so forth. But of all of them, trend trading is much more accurate. So what are we going to utilize? You know that if you've been following this channel, we use the institutional market maker method. That is the basis of the setup that I'll provide you and teach you. Basically, we are going to need some indicators that I'll show you shortly so that it will be simple and easy to follow. So this trend trade setup is going to be named as the overshoot entry style. Overshoot entry style, implying that it will wait to trade only on points of extremities. Let's jump right over the charts so that I can show you how to do it. Alright, so basically what we are going to be looking for is basically an overshoot of price to what we call the best line. In market maker method, the best line is basically the 200 EMA. And for the purposes of those who are not well versed with the EMAs that are on my charts, I have this one in dark blue, which is the 800 EMA. The one in white is the 200 EMA. The red one is the 13. The yellow one is the 5. And the bottom is the Traders Dynamic Index. So basically, I use these indicators on different occasions depending on the scenario that I have for me to get an entry. We always say a trader must not have one strategy in his or her asset guy. You need to have several strategies for you to actually be able to get entries in different scenarios. All right, so basically, let's define this strategy. Basically, you are going to require all these indicators that I have on my chart, and the only ones that you are going to be following through are going to be the upper indicators rather than this downward indicator. So how do we get some entries? Our entries are going to be obtained whenever there is a cycle trade. So all trades that you are going to be trading are going to be in cycle trades. What are in cycle trades? Basically, these are trades that are in either level 1 or level 2 or level 3. So our entries are either going to be coming on level 2 and level 3. It's either it's level 2 or level 3. If it's now level 4, level 5 or anything of that sort, you are going to reject that particular scenario. So it's either level 2 or level 3. When we are initiating level 2, an overshoot may occur, and when we are reaching level 3, an overshoot may also occur. So the first thing is to always identify the peak formation low. In this scenario, we can see that there was this particular reset which was obtained at the 200 EMA. So at the 200 EMA, we had a reset where we were going to cycle start. So we had first level drop to the downside. So this was first level to the downside, and there was accumulation at the 50 EMA, second level to the downside, then there was the third level to the downside, like this. 3 levels in one particular direction. We expect to see the market to reverse, and this held as a peak formation low. Without looking at the higher time frame levels, from this particular point, we would expect to see the market to give us a reversal. So from that reversal, we can see that there was level 1 to the upside. This was the first level to the upside from this particular point, going to the upside like that. So after this had happened, the next thing is now for us to anticipate or assume that an overshoot will occur, and the overshoot will rightfully occur at the 200 EMA. Basically, the overshoot is a retest of the 200 EMA whilst we are still in the market maker cycle. So at this particular point, that is where we were going to make our entry, right? Anticipating to go into level 2. So this particular yellow line that I've put, that is where we were going to have our entry. So after that, we can see there was now level 2 flow, and then we had level 3 flow like that. So we've said an overshoot will occur when we are in level 2 or in level 3. It's basically a retest of the 200 EMA after or still within the cycle. So if we go to the end, there was another beautiful example where we had 3 levels in one particular direction. We can see there's level 1, there's another level that is going to the downside, and the last level that was issued. From there, we had this as the peak formation low that was issued. From this particular retracement, we had the first push to the upside, and then the overshoot occurred to the 200 EMA as the first level, second level, and then third level. So whenever an overshoot occurs, which is a retest of the 200 EMA whilst the market is still in cycle, know that it's game over and you can actually hold that particular trade. Right now, I'm in a buy on GBP card, which is basically an overshoot to the 200 EMA that has occurred just today. You can see that there was this peak formation low and level 1 rise that was issued, and then the market went to the 200 EMA as an overshoot, passing the 50 EMA. And if this happens, it means that the market is likely to go to the upside, smart and clean. So this is all observed on the H1 time frame. You need to look on the H1 time frame. We had this particular W pattern, level 1, right? Level 2, and now going into level 3, that is where we had this particular overshoot, which was a retest of the 200 EMA, basically like that. So basically, this is how you will be trading this trend trade or trend setup with high accuracy. And on that note, we've come to the end of our today's video. Thank you for watching. Like and subscribe, and I'll see you in the next one.